If you invested your hard-earned money into stocks or crypto in 2022, then you are likely holding a bag that you can't sell without taking a massive loss. But now the Wall Street Journal, Bloomberg, CNBC, and every other market analyst with a TradingView account is betting that there will be a bear market recession in early 2023. I'm right there with you guys. We're all in this together. Times are tough, and we may only be at the beginning of the Federal Reserve's pain train. So the question on the mind of every investor becomes this: what should I do? What action should I take to come out ahead? Well, the good news is that I have some hard-hitting answers to those questions, and I'm going to deliver those high conviction answers and solutions in just a minute. There's some massive bombs that are coming your way. But as we wrap up this series, I need you guys to fulfill your end of the bargain. We did a lot of research, we talked about a lot of things, and I made this only because I believe the info is extremely important to distribute, so I'm going to ask you to not only like, subscribe, and comment, but I also want you to go out and share this. And yes, share. This is an alpha-packed series, and I appreciate you doing so. And YouTube did create a share button for a reason. Use it, and together we can make a difference and sound the alarm. And if you like content like this, make sure that you smash that like button, make sure you hit subscribe, boom, bang on that notification bell. Comment anything that you want in the relevant sections. I appreciate it. Now, let's get into the last episode and the last step of how you can preserve your wealth. In this series, I have shown you the story of the macro market over the last 30 years, which is important to know so that you can properly understand the fragile state of today's economy and, most importantly, how that will affect the price of Bitcoin and your portfolio. If you have skipped any of the episodes in the series, I suggest that you go back and you watch them. You're doing yourself a massive disservice by receiving my conclusion without seeing how I arrived at it. But that's on you. For the rest of you who have done it right, the episode is for you. So here's what I'm planning on doing. The name of the game during this looming recession is capital protection. This is just not a time that I'm expecting to see anything resembling any gains. Luckily, there's an asset that is perfectly suited for accomplishing capital protection during a recession. And if you think intrinsically, you probably already know where I'm going with this. Best part is that I guarantee 100% of the people watching already know about this asset. It's not stock, it's not crypto, it's not real estate, it's not land, it's not a currency. Gold and precious metals is the asset that traders and investors had turned to for centuries and decades when bad economic times come around. So check it out. During the 2001 recession brought on by the dot-com bubble or the Y2K scare, gold's spot price rose 5% while the S&P dropped 1.8%. In 2008, there was a recession that was because of the housing market collapse. Thanks a lot, Bill Clinton. And if you guys don't know why I keep saying thanks a lot, Bill Clinton, it's because he's the one that kicked it off. It wasn't Bush, it wasn't Obama. You gotta look a little further back. Gold actually surged 16.3% during that recession, and the S&P literally crashed by like 37%. When COVID hit in early 2020, there was technically a mini recession, but investors rushed into gold all that time. During that time, the economists deemed a recession, gold spot price rose about 5.6%, while the S&P dropped by about 1.5%. Now, if you go back to 1973, that was the last time the US economy experienced stagflation. Gold rose by a staggering 87%, while the S&P shed 13%. We better pray that our economy doesn't get that bad though. And if you look at the latest gold prices and compare them to the price movements of the S&P and Bitcoin, you will quickly discover that there is an inverse correlation. So as you can see, gold is kind of the move here, guys. And not just gold. Silver is historically more price manipulated and more suppressed than gold is. Which leads me into my next point. Gold's cousins are silver, palladium, and other scarce resources that I would also consider recession-safe havens. But gold and silver are by far the most reliable assets to turn during a recession. Gold is what I am buying to protect my capital. Same with silver. From this sharp downturn that is becoming more and more likely to trigger in early of 2023. Again, I'm not looking to gain very much return over the next 6 to 12 months. Instead, I am looking to peg as much of my net worth to the oldest and most intrinsically valuable asset known to mankind, gold and silver. Of course, there will be seasons in the future for hunting down 3, 5, or 20x gains, but this season that we are heading into is going to be all about shifting your mentality to not seeing your portfolio experience those 20x gains. But at the same time, not experiencing those massive losses either. Trust me, this is the time for batting down the hatches and locking up the castle. If you didn't make new gains in the last bull market, don't think that you can make up for lost time by getting into leverage trading or doing anything like that. This is not the time for that either. That's how you get wrecked and discouraged beyond repair. Now, I know you might be thinking, wait, aren't recessions like the best time to get in because that's when the bottoms are in? The answer to this is actually yes, it is very true, but I'm not going to deny that. The problem with that mindset is that the timing has to be perfect for it to benefit you. The real problem is that we won't know for sure when Bitcoin, Ethereum, the S&P, or even real estate will bottom until months after the bottom has been bought. Let other market participants take the risk of buying the bottom, and when they are right, just feel good for them. But keep in mind, for every trader who is going to accurately predict and buy the bottom of this bear market, there will be millions of traders who buy months before the bottom, run out of liquidity, and then will be forced to sell for a massive loss. For every winner, there's got to be a bunch of losers. You can't have a bottom without a sell-off in capitulation, and you can't have a capitulation without millions of traders suffering uncovered loss. This is certain, but it is also certain that you can avoid being one of those traders. So here's the full plan, guys. Let me lay it out for you. And I'm just going to be honest, I've already put mine in place. Keep your bags, consider selling a quarter or even half of your bags now to gain liquidity if you haven't already. But I would lean toward just keeping your bags as long as you can afford to lose it all if the markets go to zero. Then take any liquidity that you have, buy gold, buy silver. Buy gold and silver knowing that it's not going to make you massive gains, but it potentially could, but it will shield you from massive losses. Now, most of you have absolutely no idea how to do this, but your pal Drew is here for you, and if you want, I can hook you up with a gold broker or a silver broker. They do both. And these are my people that do all my stuff for me, not just some rando on the internet. And there's another way you can do this without actually taking physical delivery of the gold. Although I wouldn't suggest doing that, this is how you do it. Open an account on an exchange that allows you to buy gold ETFs that track the spot price of gold, not a bundle of gold miners or gold producers. Don't worry, I'm going to be rolling out a whole series over the next week or two on how the gold markets work and how you can take advantage of it. Definitely tune in for that, but I would hate it if you were here to watch this whole series without realizing one thing. You must change your perspective on this market that we're headed into in 2023. The Fed is no longer pumping billions of dollars per month into the economy through their bazooka balance sheet. The Fed has also reversed their economy growing interest rate cutting policy and replaced it with an economy slowing interest rate hiking policy. The Fed sets the tone for the macro environment. I hate it, but it's just the nature of our current financial system. You must realize that the forces that took Bitcoin to 69K and the S&P to 4.8K are now not only gone, but they've actually been reversed. Asset prices are going down, and we don't know for how long. Luckily, we know that based on the way that gold has performed in the past, it is likely to act as a safe haven for investors looking to preserve capital in this bear market recession. I urge you to change your mindset from growth to sustainability, and I bet you'll be pretty glad that you did. When everyone else is sitting on losses in 6 to 12 months, you'll be sitting on roughly the same amount of capital that you have now, just with more buying power. And you are welcome. To everyone who did it right and watched this series from the start, you're the real MVPs. I appreciate you all for watching, and I hope you learned a little bit of something along the way. I know I learned a hell of a lot while I was researching this, and I had fun doing it. Let me know if you're going to buy any gold or silver, what your plan is during this recession. Is it going to be easy for you to change your mindset, or are you now struck with fear, knowing that you might have to change and even potentially sell a little bit of your portfolio at losses? Pay attention for the new series that are coming out, and I appreciate you showing up. And if you like content like this, make sure that you smash that like button, make sure you hit subscribe, boom! Bang on that notification bell. Comment anything that you want in the relevant sections. I appreciate it. Thank you so much for showing up to this video. I will see you in the next one. Have a good day, everyone.